Welcome to the Safe Wheel live stream where I share my P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. And the system is currently, let's see what we're currently doing. It's up 21.7 last year, down 3.2. It's been about a month. This is kind of, what's interesting about my channel is that I actually share my P&L on a consistent basis over time. Nobody else does that. Okay, let's get into, well, first, type into the chat that you can hear me okay. I want to make sure you can hear me. Also, post any questions you might have about the Safe Wheel or anything else that I'm doing here or anything about options. I'll answer your questions. The music's too loud. Okay, hold on a second. Really? I got it turned all the way down. How's that? Sounds good, sounds good. Music a little loud, interesting. Okay, how about now? Yeah, I had music turned all the way down to 10%. I turned it down lower than normal today. Here. How about that? Let me know about that. I just changed the music level. Now it's off. Okay, let's see. Let's wait for your response here. All right. Now make sure to post any questions you might have. I don't want to end the broadcast without you answering any of the questions. People don't like music. That's fine. I'll just take it off. Now I know for sure it's at a good level because it's off. Okay. Okay, Schmitz likes it. Okay, for this time, we're going to keep it off. Next time, I'll put it at a level of 10. I usually have it at a level of 20. And I put it at a level 10 today. And now you guys are here. Now it's too loud, which is interesting. Anyways, okay. So don't forget to post any questions you might have now. And let's get into one of my 3 accounts, the Earnings Edge. What happened last week with the Earnings Edge? You can see here, this is my account. And you can see the symbols that we've traded, and Apple is what we traded last week, and I lost $220. So, you know, the goal here, based on back tests, we would win 50, lose 50%, half and half. A current record is 27 wins, 11 losses, and 3 break-evens. Now, with the new exit criteria, it looks like my record is 6 and 4. My record is 6 and 4. Okay, so we're almost at that 50-50 mark as far as win rate. And the thing is to keep the losses small, keep the gains high. So my average loss is only $185 with this Earnings Edge. And my average win is $966. Okay, so, you know, my win rate could be lower than 50% with those kind of numbers. So whenever you're trading something, you're listening to somebody, you're watching them trade, it's like, a lot of people talk about win rates. Oh, they win 9 out of 10 trades. Yeah, but the 1 trade out of 10 loses more than all 9 combined. So why is that? You know, you have to think in terms of that statistics. But this particular system so far, 6 wins, 4 losses, average loss $185, average gain $966. So we'll see if we can keep this going. In 2022, this system did 63% return, and 2023 so far up only 2.8%. So we're not killing it or anything, but we're looking to kill it. So hopefully we'll see what happens in the future. Did well last year. Okay, let's go to the Premier Level 5. On the Premier Level 5, you can see my account value, $33,369. Now we started this year with $33,583, so actually down a little bit. Down about 0.5% so far this year. This has been about a month. Now my record with this system is 13 wins, 2 losses, and 5 break evens, and I have 3 open trades. So you can see, been trading it not quite a year. You can see, so how many is that? 16, 20, 21 trades, something like that. So, you know, maybe 25 trades a year. So there's not a lot of trades. And I like that because you can actually go out and do things rather than sitting in front of your screen all day. Um, Now this is the PO5. So in 2022, annualized, it did 15%. It was down 4% max during that time frame. Now the S&P over the same time frame was down 20% by the end of the year and had a low of 22% over this time frame uh, when I was trading the PL5, which was last year, 2022. In 2023, again, down about a 0.5%, and the S&P is actually up almost 6% this month. So it's up significantly. So with the Premier Level 5, sometimes we don't follow when the market goes up, sometimes we don't go up as much. But when you hit those other 3 types of markets, the crash, the grind down, the sideways, the PL5 will outperform the S&P. One thing I'd like to talk about this system, what the system provides and what all the level 5 systems provide is a proactive hedge, and meaning that the hedge is already in place. A lot of people try to trade and add a hedge after the fact when it's too late. Um, and one of the things about a crash, a lot of people trade as if there's never going to be a crash again, and they do quite well until the market crashes. But when you talk about crashes, it's not a matter of if, it's a matter of when. We all know, or we all should know, that there is going to be another crash. And we had one in August of 2015. We had one in February of 2018. We had March of 2020. So that's 3 in the last, 8 years. Yeah, they don't happen very often. But when they do, if you are a certain type of trader, like kind of similar to maybe Tasty Trade kind of trade, like a lot of options traders are like that. You could probably point back to most of them on YouTube trade like Tasty Trade. You just might as well just go to Tasty Trade. And they're fine. They're doing great until the market crashes. And then they'll have a 50% drawdown maybe. Do you want a 50% drawdown? Because then you have to make 100% just to get back to even. That's not the volatility that I want with my account. So I'd rather be proactively hedged, and that's what the PL5, that's what level 5 systems do. Okay, let's get into the safe wheel. Okay, so trading Uber. With Uber, remember the safe wheel in 2022, it did 21.7%, had a max drawdown of minus 4.8%. And again, comparing that to the S&P was down 20 and down 22% max. So really, there was no comparison with the grind down market. You can see how well this system does because the 2022 was a grind down market. Now in 2023 so far, you can see my P&L 58, 59. Started with 6,085, so we're down a little bit, down about 3.2%. So this system, again, when the market goes up, it doesn't really matter so much about the whole market. It matters with your specific stock and what it's doing. This stock has been kind of almost like it's been perfectly kind of going against. And you can see that down about $215 year to date. But, we're trading a $6,000 account. So it's not relatively insignificant drawdown is what the drawdown has been. So let's get into what happened last week. Last week, we had our hedge on, okay? And we did the traditional wheel after we had our hedge, and we sold a put. And what did we sell there? We sold the 30.50 strike price. Uber went below 30.50, and so I was assigned. So I own 100 shares. So what happens with the wheel? Well, we look to sell a call. So now we're in that traditional phase, and we're going to look to sell a call. Let's double check and take a look at our hedge first, make sure it's within our parameters. Um, we want to make sure that this strike price is within 70%. Oh, last week, by the way, last week someone pointed out, I think I put my strike price a little lower than I should have. I should have put it at about 80% of the price of the stock. And I think I did it at 70%. So I was off by a little bit when I initially put on the hedge. So I just want to make that clear. But I'm going to stick to the rules here, make sure that it's within 70%. So right now we're trading at 30.08. So 30.08 times 70% is 21, and we're at 22.50. So we're within the guidelines of, and then also we're within the guidelines of this strike price being close enough to the price of our underlying. And then also we're at 137 days, so we're not under 100 days. So the put is good to go, or I should say the hedge is good to go. So now we deal with the traditional wheel. So we own 100 shares. I was assigned, so I'm going to look to sell a call, and I want to be able to get enough premium out of the money to get 1%. Let's take a look at this. I haven't really looked at it, and we want to be within this this week on expiration. We want to get this close expiration. These are the ones that are going to expire at the end of the week. They have the most data. Okay, so out of the money would be, well, 30 might be pretty close, but let's see, looking at the calls right on this side, 30 would be pretty close, but 30.50 is definitely out of the money, right? So I'm going to sell one of these. Now, the reason why I'm doing one again is because I'm between $5,000 and $10,000. So we do one on the traditional wheel and 3 units or 3 positions on the hedge. If we had $10,000, between 10 and 15,000, the sizing would be 2 units and 6 on the hedge. And you just keep going up from there for every $5,000 increment. So that's the sizing. A lot of systems don't have sizing included. If you follow people, you have no idea what their sizing is. Like, what's their account size? How much are they trading of that? So there's a lot of systems out there that don't even talk about sizing. They just go out there and talk about, how to pick the right direction, and they have this way of doing it supposedly, and they can make money off of it. But you don't know what kind of sizing they're using, and that's like a key element. Sizing is so important. That's like half the battle. Okay, so I'm going to go ahead and sell this call. Mid price is 50. Maybe I'll try 51. I'm going to sell one call that expires at the end of the week. Let's see if we can work this order. Pick up $50. Okay, that's good. That's good premium. And again, our cost base is at $30.50, so we basically sold right at the money. When we look at where we wanted to sell it. So we wanted to do it based on our cost basis. So we wanted to make sure that we didn't lose money if we get assigned. So I went right at the money, right, and picked up $50. That's as close as I'm going to get. I wouldn't go below $30.50. So I think I might have misspoke there. You want to look at your strike price, and that's where you sell your premium. You don't sell it based on the price of the stock. Okay. All right. Now, the next thing I need to do is protect this hedge. So just in case Uber just shoots to the moon, I want to own something for about $5. So this one's $7 or $8. I won't pay 7. I'll pay 6, but I won't pay 7. So I'm going to come to the 33 strike. I'm going to buy it. One of those. It's going to be $5. Okay. Okay. So there's my traditional wheel at the 30.50 strike. I've got my hedge here, 3 of those, and I've got my protection of my hedge here. So that's kind of what's different about the safe wheel, is you've got a hedge and protect the hedge. And then you have your traditional wheel that where you collect your premium, where it kicks off, your premium by running the wheel. This obviously costs money, but it protects you. Let's say that Uber goes down to $20. Well, I'm going to make money. As opposed to most traditional wheel traders, if they're trading Uber and it goes from 30 down to 20, they're sitting in that trade and they're going to be there maybe for a year or a year and a half. I've seen people in their trades for over a year sitting there hoping that it'll come back. That's not how I want to deploy my capital. I want it continuously working for me. That's why I trade the safe wheel. Okay. So let's get into, one thing about the safe wheel. I do have a guideline flowchart, and also I have the 6 filters that I use. It's a course that I put together for $89. So just think you can get something for $89 that made 21% last year in a down market. So that's available. There's a link in the description. Also, on Friday, I'm going to take a look at this call that I purchased, this $33 call. And before it expires, I'm going to look at it at the end of the day on Friday. And if Uber is $33 or higher than $33, I'm going to sell it. I'm going to collect some money. And also, if you want to know what happened, I'm going to put that on Twitter. So if you're following me on Twitter, you'll know what happened there. You'll see this particular final trade. I'm not going to come in to do a live stream based on, this one little $33 call, but I am going to put it on Twitter. So follow me on Twitter to see kind of like the little tweak here. If it gets implemented, you'll know. Also, don't forget to hit the like and subscribe button and the notification bell. As far as I know, the only way to get onto this broadcast is through the notification bell. If you don't see a notification bell, I don't think you can find this thing. All right, so let's get into any questions. Okay, so we talked about the music. Murphy's Law and Carl's Law. Let's see, Murphy's Law and Carl's Law. What can go wrong will go wrong. You're probably referring to Uber as far as how it's perfectly kind of went against everything that I've done so far, and it's only down like $200. It's not bad. Okay, Fransos. Hello, longtime viewer. I don't have 30K. I have roughly 10, and I don't know where to start. I've already followed your 2060 fly course. Thanks. I would take 5K and go into the Earnings Edge and try to see if we can get that thing up. I mean, my Earnings Edge account is, let's see. My Earnings Edge account's at $8,400. I mean, take 5,000, see what we can do here. Try to get it up. I'm trying to get this to 30,000. Once I get to 30,000, I'll probably just offload it and then bring it back to 5,000. So that's what I would do. Now, is your $10,000 money that you need, or is it money that you don't need it at all? Because if you have credit card debt or anything like that, you would want to pay that off first. I mean, credit cards, what are they, 18, 20, 24%? I mean, that's an automatic 18%. I mean, take that first. But one of the things, though, is important is that you can learn. So that's why the 2060 Fly course or the 5-step options trading success program course is really good, because you want to learn, because that's what I was doing. I was always learning, even though I would blow out my account back in like 2008 was the last time. I was constantly trading money. Sometimes it was even money that I shouldn't have been trading, but I was always trading just so I could learn. So, but I don't recommend trading money that you really don't have. If you own if you have credit card debt, you really don't have that money. Okay, Stefan Bender. Good morning. I was wondering why you try to keep the underlying on the safe wheel between $20 and $40. Is there an issue using more expensive underlying? So the reason why I keep it between $20 and $40 is because I've sized out the system so I can do 3 put hedges and 1 uh, option for the wheel, whether it's selling a call or selling a put. So it's a 3-to-1 ratio for every $5,000. That's the ratio based on a $30 stock. If I start getting into the $20 under the $20, I'm not really picking up the premium. The premium's not available. And if I'm over $40, when I go in to add that second layer, it could be using up too much capital. I don't want to be in a situation where it's time to put on a second layer and I don't have the buying power to do that. So now I haven't run the numbers, but it is probable that you could do a $60 stock with a $10,000 account and do the same thing. So if you had $10,000, you do 1 and a 3 put hedges, 1 option on the wheel, and you do it for every $10,000. Now I haven't ran the numbers, but those numbers would make sense to me. But you always want to back test. If you're doing anything different than what I'm doing, you need to back test it. Okay. Smiths, in a situation where a second tier is added, the flowchart does not sell a call against the first tier because it can't get 1%, correct? Can we sell a covered call at the first tier cost basis strike to collect some juice? I would not unless you can get that 1%. And the reason is because when this system gets 2 tiers on and then the stock moves up and you get called away, because eventually that happens a lot. So your second tier will get called away. You're holding 100 shares, a full 100 shares, and it's moving higher and higher and you're not getting called away. So you're making a good chunk of change. And that's kind of where this system kind of has its heyday. That's where the system makes good money. So you don't want to take that away from the system. You don't want to sell a covered call in that tier number 1 because you're looking for that big hit. Bill, okay. Hello, this is my first time here. Do you have a list of criteria and rules for the safe wheel similar to the 2060 trade? Yes, I do, and I have that for only $89, or is it 85? $89 available. There's a link in the description. The whole system, it's a flow chart, and then it gives you the 6 rules that I use to pick the correct stock. Because you need to pick a stock that has the right amount of premium and is in the right price range, and then there's like 4 other things that I use to pick the right stock. Walters, Macy's still looks very attractive. I know Macy's was really good to me. Oh, it's in the $23. Yeah, Macy's seemed to do quite well, but maybe I'm being a little stubborn with Uber, but I'm trying to prove a point that it doesn't matter what underlying you use. It should work as long as it fits the criteria. Now, especially with the looming bankruptcy of BBBY, I know your rules don't apply much attention to the quality of the underlying, but mine do. Also, as far as owning Macy's on a fundamental level, yeah, there's stories out there that could move the stock higher. I don't typically, in fact, I don't at all use fundamentals in my decision making. Okay, Neil, thanks for the Twitter link. I didn't realize you posted there. Yeah, I just started 2 weeks ago, maybe, on Twitter. So I think you'll find that there's a lot of good information. There's a lot of the way that kind of what I'm thinking that day in terms of trading and how that can help people. That's kind of what my Twitter is about. I also kind of asked some of the Twitter gurus for their P&L. So far, I'm 0 for 2. I actually have a list. I've created a list of the no P&L list. So there's a couple guys already on there. One of them blocked me, and the other one just ignored me. And there's a few more that are ignoring me right now. They just don't want to talk to me. Uh, I guess we know why. I mean, if they were making money, wouldn't they share their P&L? Oh, you were referring to there will always be a crash. Yes, what can go wrong will go wrong, and there will be a crash. We all know there will be another crash. So, Oren, just to be sure, when you selected which call strike to sell, you looked at the put that got you the stock, correct? And not the current price, correct? Is this the only rule? Yes, but well, no. You want to be at the money or out of the money when you sell the call, and it needs to be at least 1% of the strike price. So the strike price was $30.50. So the price of the option should be at least 30 cents, right? If it's 25 cents, you're kind of pushing it, you're too low. If it's 10 cents, you don't sell it, there's not enough premium. So there's like three rules, it looks like, right? One, um, you've got to be at the money or out of the money, and two, it's got to be enough premium. So that's two. Okay. I don't need the 10K. Great. Well, I would take 5 of it and throw it into this earnings edge and see what'll happen. Take some risk with it. If I was going to take some risk, you could take some risk and do the tasty trade stuff too. If you understand that, that's getting a little complicated, but you know, take some risk. Try to get it up to 30. Why did you go for the 30 strike? It is more premium, but the 31 strike is 1%, allows more room for stock to grow before being called out. Yeah, I could have went either way. Definitely could have went to the 31 strike. Easily could have went to the 31 strike. Let's see what that one was. Not as not as much premium, but definitely could have went there. And probably a lot of times I would have went there. It's kind of 50-50. But you can see now, actually, I think at the time there was enough premium, that it was over $30, but now it's under 30, but you're pushing it there. But I could have went there. Will, is there a way in your rules to know where to sell this call? Let me see here. Well, you want to be out of the money, and you want it to be at least 1%. So this one right here is not 1% right here, right? It's 30. Well, our 1% would pertain to the $30.50 strike. So you want to get at least $30. So you come around and you're looking for at least $30. Try to get as far out of the money as you can, but sometimes I just decided to take the at the money here. Is there any rules about that? Well, it just kind of says in here you want to get 1%. You want to be out of the money or at the money, and you want to get 1%. That's pretty much the rules. Just to be sure, when you select which call, you look at the put that you got and not the current price. Yes. So I looked at the $30.50. That's my basis, basically. I want to make sure I don't sell a call underneath that. I prefer to get it out of the money, but I want to make at least 1% of the $30.50. So like $30, $31 would be kind of the criteria, and I want to get out of the money. Could have went with the 31. Are there any other guidelines? Not really, as far as selling a covered call that I can think of. I mean, I think it's really just those two items. Unless I missed something. A lot of times you guys come up and tell me, "Oh yeah, Carl, you missed this." Like Will said, "Hey, maybe you could have went out of the money with that one." That happens. You guys understand, or some of you guys understand this system really well. Okay, let's see what's next. Walter, very much appreciate what you do. I appreciate you, Walter, and I appreciate that you always remind me to ask people to like and subscribe. You don't have a Twitter account, but looking forward to communicating with you there. Yeah, that's another thing about Twitter is that they have like a little messaging thing, so it's easier to kind of contact me. Or you can email me, of course. Bill, I'm about to put on my first 26 trade. Any advice, tips, tricks other than following the rules? Yes, only trade one tranche because it's a tool. It's a learning tool. Don't go in with more than one tranche because it's all about learning. That's kind of the difference between my older videos when I talk about the 2060 and my newer, my later information is like just trade one tranche because it's about learning. It's not about you're going to make a ton of money, but you're not really going to lose money either trading that 2060. Now, especially if you keep it to one tranche, I mean, you're not going to have a lot of risk at all. Okay, I don't see any other questions. So I'm going to get ready to end the broadcast. And I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week.